All right, so officially we got a chart up here, man. The moment we've been waiting for. So basically, one thing I want to start off by saying, man, I hope you guys take mad notes. Remember, like I said, guys, most of my trades are based off the Fibonacci. So I kind of want to, before I explain anything, I kind of want to go over right here where we're going to run this, because there's two ways you can run it. You can run it like this, going up, and then you can run it like this, going down. So how are we going to know when we're going to run it? We're going to run it from the market structure break. Always. We're always going to run our Fibonacci based off of market structure breaks. So what I mean by market structure breaks is I'm looking for candles to create new higher highs or new lower lows. So for example, this is a trade that I did take right here. So as you guys can kind of see here, you know, price did make new higher highs. We were down here stuck in the range, and then price did make new higher highs. So as you guys can see here, if we would have run our Fibonacci here from here to here, what do we have here? We have our golden zone, and then we have our 764 zone. So like I said, guys, we enter 80% of the time off our golden zone for the buys or for the sell. In this situation, since we have market structure breaking to the upside, basically this push right here, creating new higher highs, taking out previous highs, as you guys can see here, and the move ended up here, we're going to run it from here to the upside. So in this situation, we're starting here and ending here. We're going to draw our golden zone here because we're focused on what's happening here. Worst case scenario, we have 764 as our backup. So as you guys can see here, if we would have taken this trade right here based off of our Fibonacci, we have a market structure to the upside. We're clearly bullish. What do we have here? We could have entered here. What do we have? We were in exactly 19 pips in drawdown before hitting take profit 4, which was, as you guys can see here, 71 pips. So one thing is, when it comes to these type of trades, is how are we going to calculate our stop losses? How many pips are we going to risk on this trade? Like, Daniel, I don't know where to put my stop loss if I'm going to enter at the 50 and the 618 on this trade. So one thing I want to kind of explain is every trade is going to be different, just because as you guys can see here, this level right here was 62 pips. It was 62 pips in this range of our Fibonacci's. But we're going to have situations where, let's say, for example, it's going to be from here to here where it's 100 pips. You know what I'm saying? So basically, not every trade is going to be the same. Not every trade, not all the time. So our stop losses are always going to be a little different. So in this situation, or mostly in every situation, I always want to have my stop losses. Like, let's say on this trading setup, where am I going to have my stop losses? I'm going to have my stop losses under the 764. So let's say right here in between the 764 and the 1 where we started our Fibonacci. So let's say, for example, if we put it under here, it could be kind of risky. It'd be like, oh, okay, we're risking too much because we're gonna break under where we started. So let's say, for example, if price were to just keep coming down here, this trade is not valid anymore. It's not valid. You're going to have to skip to a higher time frame, and you're going to have to see. But in this situation, we're going to be going based off the 15-minute. And the 15-minute is mostly 80% of the times I take my trades off 15-minute Fibonacci. So as you guys can see here, we did respect the golden zone. We did kind of disrespect it, but we had our 764 as backup. And as you guys can see clearly as day, the second that we did break through and come back down, we retested. We came under and closed above the 764, and then what happened? This gave us confidence, like, oh, okay, we're still good. We're still a little safe here. And then the next candle came, and boom, take profit 1 was hit, and then take profit 2 was hit. So as you guys can see, our 764 kind of gave us like, hey, look, a little, hey, you're okay. It gave us some signs there that, okay, we're still okay in this trade. So in this situation, if you would have taken a trade here, your stop losses could have been, for example, let's say right here, or it could have been here, and it still would have been a little risky, but you know, hey, you're still in the really good risk to reward ratio, because our overall take profit is up here. And one thing I want to tell you is you never want to have a trade that's under a 1-to-1 risk to reward ratio. You always want to have a minimum of at least 1-to-1. Like, never have anything under it. After that, it's not even a trade. Anything under a 1-to-1 is not a trade. It's gambling. And you're going to lose. Your losses are going to be a lot bigger than your wins. So you never want to have that. So as you guys kind of get used to the strategy and you back test, you do this on, you know, other pairs, and you see, you guys can go in there and kind of add up. You know what I mean? Like, hey, look, you know, price only went down 20 pips today. You know, price went down 20 pips here, 20 pips here. And then, you know, do 100 trades and kind of calculate an average. How many pips in drawdown were you? But then again, like I said, guys, not every trade is the same. Every trade is going to be different. So in this situation, our range right here was only 60 pips. So we kind of only want to risk maximum 30 pips, maximum. So we could have had a 30 pip stop like right here. Maximum. And as you guys can see here, we came up, came back down to the golden zone, and then boom. Price did hit take profit 4. Boom. As you guys can see, look how our levels are respected and rejected. Boom. Boom. Respected. Boom. Touch. Wick. 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 Come back down. So you guys can kind of see exactly like how these zones are being respected here. You know, it's not rocket science. It's clear as day. These zones get respected, they get rejected, and they get, you know, they play out really nicely once you start to learn how to use it. So let me give you guys another example. So as you guys can see here, what do we have? We have market structure after this range right here get broken. This is the weekly open. I don't really like to trade when the weekly opens. Not really, just because you guys can get in a range. But as you guys can see here, we're kind of like ranging right here. And as you guys can see on this push, we run our Fibonacci from here to here, from the bottom of this push on the wick to the top of this wick where the push ended. As you guys can see here, on this candle right here, at the bottom right there, to the top where it ended, what do you guys see here? You see the golden zone being respected. And then what happened? Take profit 4 was eventually hit. So what happened? This was a 90 pip move. It was massive. That thing was massive. So let's say we would have entered here. Where would we have calculated our stop losses? As you can see, we have a 90 pip stop here. If we wanted to risk 3%, if we wanted to make 3% on this trade, or just risk a 2 to 3 to make 2 times our risk, we would have had a 45 pip stop loss. And as you guys can see, with a 90 pip gain, we made 2% of our trades. If we wanted to make 3 times our risk, we could have been a little bit more aggressive, and we could have been like right here. Stops under here between the 764 and the 1. Boom, 30 pip stop loss. And as you guys see, boom, here, perfect. So at the end of the day, all take profits were eventually smashed. And as you guys can see here, what happened? We made new higher highs as well here. This push right here in the London session, taking out all these previous highs, making new higher highs, we're going to run our Fibonacci from here to here. So this is where our take profits come in play, because we're not always going to hit take profit 1, take profit 2, take profit 3, take profit 4. We're really not always going to do it. But as you guys can see here, our golden zone, again, was very much respected. And what happened? We hit take profit 1 for 30 pips, and we almost hit take profit 2 before we came back down. So this is going to be very, very important, because this is going to happen. This will happen, and you guys will notice this a lot. if you're not running your Fibonacci's right, if you're not putting your confluence together, and you're not checking out higher time frames. So basically, as you guys can see here, we did hit take profit 1. We didn't hit take profit 2, but we came back down. And then boom, as you guys can see, we just continued to melt. So what do we do in situations like this? One thing that I do is the second that my 23 is hit take profit 1, if I'm not taking out my positions or cutting them at break even or putting them at break even after taking partials meaning, let's say I throw, a 0.10 for the buy, the second I hit 0.23, I'm going to cut it in half or take 80%, which I'm going to go to close. And then when I put close, it's going to tell me, I'm going to go to my lot size and I'm going to cut it. You guys will see a video on that. And I'll take partials and I'll put stops to break even and then I'll let it run. Other than that, boom. That's what I'm going to try to do, because you'll see 90% of the time, 99% of the time, at least take profit 1 is getting hit. Literally almost every single time. It's super rare it doesn't. But as you guys can see, take profit 1 was hit and then boom, came back down. So let's see what we have here. What do we have? We have a kind of decent example right here. So as you guys can see here, we do have new lower lows being created. So if we were to run our Fibonacci from here to here, what do we have? We barely have our, we barely have our 50 and our 618 zone being hit, barely touched. But this is during the Asian session. This is one thing that I try to tell everybody is in this session, you really kind of don't want to trade the Asian session. You never really want to trade it. Never ever trade it. I don't recommend it unless you're about to hit pre-London. Then okay, it's great. Because 50-50, sometimes you won't even ever win during the Asian session. Sometimes you'll have a really good Asian session, and most of the time you really won't. You know what I'm saying? It's really rare you can have a perfect Asian session every single time. So one thing that I like to tell my students is these setups happen a lot and you can win a lot if you're very disciplined. So I recommend people trade during the New York and the London session. There are times where you're going to see a setup where it looks so good that if you don't get in, you're going to miss your entry. And it happens. So sometimes the move will play out, it'll form during the Asian session, but it'll end up playing out during the London session. So you got to be very careful with that. One thing about me is I don't recommend anybody take trades after 12 o'clock p.m. I never recommend it. If you guys want to trade, I recommend you guys trade. If you want to trade during the Asian session, worst case scenario, try to trade between 10, 11 at night, and then boom. So me, I'm in Florida, so we're Eastern Standard Time. Excuse me. We're Eastern Standard Time, so I would recommend you guys only trade between probably like 9, 10 o'clock at night, worst case scenario, to like 10, 11 in the morning. That's the time frame that these trades work out beautiful. Beautiful, 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 beautiful. Quick moves. Market is moving perfectly. It's respecting you. If you guys want to trade after 11, 12 o'clock in the afternoon, it's suicide. It's suicide, to be honest. You either die, you lose, or you got lucky. You know what I'm saying? So you always want to kind of have your setups in the morning or during the London session. You always want to take those setups because price is most likely to respect it. So to continue on, let's keep going here. So what do we have here? We have price in this range. So what are we going to do? We're going to be patient. And as you guys can see here, if we were to draw our Fibonacci from here to here and draw our golden zone from here to here, what happened? We had our stops a little bit above here. Let's say here. Let's target our take profit 4. As you guys see, ended up getting hit. Beautiful. And boom, what do we have here? We have golden zone hit, take profit 1 hit. So at this moment, you could have taken partials, stops to break even. But like I mentioned, this can happen a lot where price is going to come back up, retest the zone, and then continue to fall back down. As you guys can see, that's what it did right here. So this is another very important thing also. If you see that price doesn't continue to make new lower lows and it comes back to your entry, very, very risky, but it is still valid. I don't like to trade it, honestly. I really don't. But anyways, you'll see that the moves end up playing out. Like I said, guys, this game is all about discipline and being patient. So as you guys can see here, let's say we would have taken this entry right here at 6 in the morning. The move ended up completing at 11:45. So played out nice. It played out nice at the end of the day. It was a real nice move. This move ended up being a 69 pip move, so it ended up playing really good. I personally wouldn't have caught all of that because my stops would have been broken, but kind of clean move. Let's go here. Okie dokie. So what do we have here? We have market structure being broken to the upside. We have this big push here, taking out these previous highs, getting out of the range, creating new higher highs. So what we're going to do is we're going to run our Fibonacci from this push to this push. But look at this. This is during the Asian session. So price is going to either range, consolidate, or it's going to take forever to get into your, profits. So as you guys can see here, if we highlight the golden zone, you'll notice that price ended up respecting it very lovely. Range really good, but ended up respecting and taking forever. So let's say we had stops here, 21 pip stop loss. Look at that. You were making 2.7 times your risk. We ended up getting a 58 pip move here at our golden zone. So that was pretty lovely. As you guys can see here, if we would have entered here during the Asia session, we would have been in consolidation before we started getting into the pre-London, which we're in London. That's where all the volatility came back. And as you guys can see, boom, shot up immediately. Let's get in another example here. So as you guys can see here, we have market structure being broken to the downside here on this one. So let's run our Fibonacci from here to here. Boom. Now we got a short trade right here looking nice. So look at this. 5618 golden zone. As you guys can see, price came here. Golden zone, boom, hit take profit 1 for about 20-30 pips before coming back up and hitting our 764. So look at that. After hitting our 764, price did continue to range in here. And then when that New York session came, that's when, price started to like, hey, look, now we're going to have some pretty big candles. We're going to have some big moves. And as you guys can see, take profit 1 was hit here, came back up, 764 was rejected, came back down, came back up, 764 rejected, before coming back down and hitting take profit 2. So look at this. In this situation, let's say we would have held this, stops above here, we would have had about 37, 38 pip stop, almost a 40 pip stop. So as you guys can see here, we ended up hitting take profit 2 for 47 pips. We didn't hit take profit 3 or 4. So that's why we have our take profit 1, 2, and 3 to take partials and stops to break even, because we want to secure our profits. We want to secure our trades. We don't want to just let them run all the time and, just leave them. Like, hey, look, we're going to leave them, because what happens? This thing came right back up after hitting take profit 1 right here. And it could have just kept going up. It could have. You know what I'm saying? It could have just kept going all the way up. So let's go on GU here and let's give you kind of examples here. So I'll put that in the next video.